Good morning, everyone, and welcome to the European crossover webinar. We're getting ready to get actually, we just got the release of the market PMI data. You can see it came in a little bit stronger here at 46.9. Services came in at 47.3. They're expecting 41. And composite 47.5 versus 42.4. We're seeing the euro now. I do have the futures up in here, the euro futures, and which is the 6E, the cable, which is the 6B, and do have the gold right in here. I just have it on a separate page. The thing that helps us to be able to, in some of these moves, as I was mentioning yesterday, gives us some, makes it, not makes it, but we can see certain, when we're hitting, I'll give you an example. Yesterday, we saw some uh, stops taken out on the cable, and the cable didn't hit a significant level yet, but we could see on the volume that it really sparked up and may be able to help us a little bit. But probably scalping around myself in the euro and the cable on those particular, but with the futures. Along with the S&Ps, obviously the big news overnight. We're going to get to that. I just thought I'd go in touch with the FX since we did get this data out. We did get um, market PMIs out. France came in much stronger, 52. So you can see here on the euro, that is on the 6E, much stronger here. We'll move this out of the way. You can see we've continued to work a little bit higher here. Especially once we got past with the futures, getting past VWAP, and you can see here on the dip, kind of held defended VWAP, and down here is the 2-day VWAP, and like I said, compared it here on the futures. When you look here on the 2-hour chart, on the 6E, which is going to be the euro futures, able to go and see some breakouts. I mean, there's going to be a differentiation because it's futures in price, but you can pretty much just go and look at where, let's say, the 6E is trading at what, um, 1321, whereas the euro itself is trading at 13 even. So basically, it's a difference of 21 pips. So you, once again, all you do is just add that difference. But you can see here, as we've broken this trend line, we did go in and challenge, and so far, at least for now, we've gotten past the 38%. And here was a key level here. But look at this on a 2-hour chart. We've closed solidly above that. So that really opens the door for them to potentially challenge a little bit higher. Um, be the next level there. But once again, you get a close and look at this 2-hour close. Not only have you broken above this trend line here, you've already done that, you've successfully defended it, but you've been closed above this most recent high. That really opens the door for them to go higher. I mean, we can't take a pause here, but really opens the door for them now to make a run to 13. Looks like about almost 50, like 1348. Take off the 21 pips. You're looking, what about 13 in the CAS, like 1326 or something like that. But anyway, nonetheless, we're going to get back into this. Obviously, the market PMIs are doing much better, so we're seeing that here. German PMIs came in better, 46 versus 41 in the flash. And we do have UK flash PMIs at the bottom of the hour. They're looking for 41. They may not do as well as Europe. Europe's also doing a lot better with the whole COVID, especially compared to the U.S. We're doing very poorly. A lot of reasons, them pushing us in certain states to go on and open earlier just for the sake of it being Memorial Day, which was pretty silly. Especially here, like in Texas, we were doing very good. We were well ahead of the curve when it came to keeping this thing slowed down. And the governor really pushed for us to open it up by Memorial Day, and we lost all those gains. And now we're basically it's almost a tie between Arizona and Texas as to which one's worse. So just goes to show you we didn't take the precautions that they did in Europe, and now we're paying the price because of the governors of those states, in particular Arizona, Texas, and Florida. who pushed open early at the behest of the president. So now we're really stuck in the muck. But anyway, nonetheless, here's the data that we've got in here. And as I mentioned, we just got this data, which is the um, flash PMIs, but for the Eurozone. And once again, they outperformed, and we're certainly seeing that with a little bit of push up here in the Euro. Let me go and move this out of the way. Well, actually, before I do that, we do have UK flash PMI at the bottom of the hour. Then as we roll into the States, we do have building permits at 8 a.m. Eastern. I'm in Central, so of course it's going to show it, 1 hour before. But it's actually at the Eastern time, 1 hour before. They're 8 a.m. Eastern, we're at 7. Hence the difference you're seeing here. Then we do have market flash PMIs at 9:45 Eastern and new home sales at 10 a.m. Eastern, along with Richmond Fed, which is a very somewhat lower tier piece of data. So let's go now move into the futures, and we'll go over the hullabaloo that happened there. So hang on. Okay, so you can see here this big spike that we had. It was something else. I mentioned in the chat room I was actually short, and honestly at the time I was frustrated because I talked about this towards the end of the day. I made a point of saying, "Hey, look, I've just been going with just the technicals. These markets, I felt, we're the key level right here. I was going to show this out here at 31.34. That was frustrated. I'm like, God, they at the level that they were at. I made a point in the chat room late in the yesterday afternoon. I said, "Hey, look, I'm not even going with rationality. I just go with where these technicals are as far as levels." And I was talking about the VWAP and the 2-day VWAP. And at the time we'd congregated, I think it was around 31.93, I think it was. And I said, "Hey, look, they're just going with whatever the VWAP is. It's basically short-term momentum traders." And I'd mentioned, I said, the way this is setting itself up, it looks like we're going to make a potentially move to 31.12, which is exactly where they went to. Actually, at the very end, they popped up to 31.14, and I think they closed the futures at 31.12. And then, of course, then we worked even higher, and I actually got short, and I'm thinking, this is nuts, because this thing had already made it up to 31.26. I'm thinking, man, this thing, considering where we were on Monday, and then we even closed stronger, and it was still moving higher. And I said, this thing may have to just have like a blow off top or something in order to resolve itself. And so I ended up walking away a little bit later on, and then I came back. And when I came back, we had really fallen apart. Actually, by the time I came back, we were right here, right there. I covered just right under, just I think like maybe 30.79 or something like that. I've been asking the chat room like what happened, and then once again, how these markets bounce back. So I just wanted to get the heck out. Then I saw the headlines. Then we rallied back up to 30.95. It's actually, I think we got up to 30.97 and posted a chart. I think that was right there at the 50% back. There was the 2-day and single-day VWAP were right there, and took a short, and then covered, I think it's 30.84, yeah. And I was kind of kicking myself for covering because I thought we're probably going to fall back. And then all of a sudden, then Navarro came out and he denied, which I'm sure you all know by now, then he denied the part about the China deal was over. He said it was all taken out of context, blah, blah, blah. And then we came back. And the only thing I did miss, I was kind of, I was trying to post those headlines, is we rallied back all the way up here to 31.17. I would have liked to take that short. We came back down, and then we started pushing higher. And then we kind of danced around here. But here's the deal. Look, that's key, 31.34. But if you look at this, here's that 31.23 that I've been harking about back in the last week. And I kept saying the importance of this number. You can see here, that's why I have it even in a pink line. And my thought was that was on Friday. When we broke past the 31.23, remember I kept saying it kept dancing back and forth. Once we broke past it, it was over. Then we really started coming unglued. And you can see here now we've closed above the 31.23. Just like I told you about the euro, you close above these significant levels, it opens the door for us to press higher. Now, I was eyeing this level last night in Asia. I was like, wow, maybe it's going to try and get to 31.34. But the fact that we've gotten, and you can see it's been on a buy mode this whole time. That's one of the things I argued about, maybe not argue about, but I posted, or not posted, but I did post, but I'm saying is I impressed upon in the afternoon trading when we were still, like when we were writing here, I was saying, hey, look, it's been in a buy mode. You see what I'm saying? That's what you can see right there. It's been in a buy mode this time since early in, I guess not early, but mid European trading. It was in that buy mode in the 30-minute. And it still remains. So even when we got this pull down in the morning, it was still in the buy mode. So I was saying, hey, look, they're still in the buy mode. They've gotten above, VWAP and 2-day VWAP. These short-term traders are just going to go with it. And then we did take that dip, and then we just started mounting. And here was my little purple dot, which I put on here, like where an area can go to. And put that for here. Should be. Kind of gives me like, okay, this is where I think it may go to. So anyway, that's why I came up with the 31.12, and we actually got up to 31. Actually, on the closing bell in the futures, it got up to, I saw 31.14. And then at that point, I'd got short, and we took this rally up in here. I'm thinking, this is stupid. This thing is still going higher. And then all of a sudden, I said, that's when the wheels fell off the caboose. I came back, and I'm glad I didn't take it on. I thought about this, as I mentioned earlier, and I'm just trying to lay out the lay of the land from a technical standpoint, because where I'm looking at it, like I said, I'm pretty much just trade the SPOOs now. I was talking to, I forgot who it was in the chat room in Asia, and I have the NAS and the Dow futures, and even the Russell here, but all the indices, to a certain extent, they march to their own drum, but they do kind of go with their own move. They'll follow to a certain extent in sync, but I felt the way I trade, it's more conducive for me just to focus on one, and that's it. And so I'll scalp around now on the euro and the cable in the futures using the same data that I'm looking at, using VWAP and 2-day VWAP, and looking at volumes on short-term moves. But like I said, this is important, this 31.34, but the fact that we're still in a buy mode and we've cleared 31.23, which was so huge last week, you can see even before then, you can see how important this level's been. You see, once we get above it, we rally up, we hold it, defend it, rally up again. If we break below it, we have a battle here. You see, I mean, it's significant. The market's not going to go on and forget that. So once again, get rid of this one. So that even now, if the only thing I would say is if someone was long and we made it to this 31.34, which we just did, okay, and we closed the hour just as we were coming on, it closed out there. Yeah, you can take a pause there. You can see here we made it up to, and looking at the 5-minute, you can see right there. So a dip back, but I wouldn't be shorting it. And that was the case I was talking about yesterday. When we were at 31.93, I'm saying, you're not even getting rewarded for it, because I even talked about the potential yesterday. Remember to move to 31.03, which we did, and actually it was 31.03. We just backed down just a little bit. We broke a little bit later, but we came right back, and so all the technicals are going this direction. Yeah, if you're long, you probably want to take some off at around this 31.34. But once again, the fact that we're above 31.23, the bulls are still in control. And for us, once again, the same way we came back Monday from the open we had in Asia on Sunday, and we came back strong, and then we turn around and come right back here after the debacle. I mean, that's what I'm saying, is it's got to scare you if you're short and thinking, wow, how much further does this thing have to push up? So it leaves you kind of questioning how far, can this thing go in and move up? I would think it slices both ways, though, because I would think that those that were long, they'd probably just say, okay, enough, who knows what could happen, and maybe we'll have a tougher time going with this at higher levels. When we're able to resolve ourselves and challenge this area, maybe that's it. But once again, like I said yesterday, I'd have to see reversals to prove to me that that's the case. And we haven't seen a reversal yet here. You see nothing to suggest anything like that. So essentially, that's the lay of the land on this right now. But obviously, that was a big story. Yeah, I'm not sure where it goes from here. I was concerned yesterday when I was short in Asia because my thought was, wow, if we're already up in here, and remember we got up here, we'd actually done this right here in Asia, and this is frustrating. I thought, wow, considering how they came back from the open in Asia, this suggests that we may have to blow much higher. To anyone who's short is probably going to say, forget it, I'm just not going to fool with it right now. And anyone that's long, well, they've got it going for them and they can push much higher. And of course, like I said, this came out and I was able to exit and I'm very happy about that. But for us to come right back and we didn't even look at it. Look how significant this 31.23 is, and we didn't even pair back through it. You see what I'm saying? We just bolted right through it. And with that, once again, just like I was saying about the euro just a little while ago, we've extended those gains. Now we're taking a little bit of a pause here, but taking a little bit of pause doesn't equate to getting short. We just don't have any kind of reversal to say that. So hence that's what I'm looking here. And you can see here, there's not like a big explosion in volume or something like that here. Look at this, they did goose the stops here. Look at this right here. Once we got past that, people threw in the towel and we made that run up in here. See the good volume right here? So we were basically trading right in here around 31.16. And once we hit these stops, you can see the volume here. We made it all the way up and rallied about nearly 15 handles. And now we're taking a pause. And look, we're still moving higher. So, but once again, like I said, it does not bode well if you're short. I think you have to sit back. And I think a lot of people will do that and sit back and say, you know what? Let's see what they do. There's no use stepping in front of a train. And hence why now I'm tracking the euro and the cable the same way, so I can just do scalps there because you've got pretty good volume in those markets. And to get back to that, got the same setup here with those, and be able to maybe catch some scalps without sticking my neck in, especially like right now with the SPOOs. I mean, who knows what it's going to do? And I've got the same setup here for gold too, but I think that probably makes a lot more sense than, like I said, I definitely don't want to stick my neck or put it across the woodboard with what's going on with SPOOs right now. It's just pretty nutty in my book. Here's a euro, like I said, on this 2 hour here. We did close above here. Maybe you get a little bit of a pause. We're not seeing much volume in here. You see that? So nothing to say. You can see where we broke here with the euro here on some pretty good volume. Made this run a dip back. They support it, make a new low. So yeah, we can get a little bit of a pause here. We're off about 10 pips, or in this case, tick since it's the futures. But nothing is jumping out here. We'll look at the cable. Pretty good volume here. It looks like here. So maybe you get a little bit of a double top in here on a very, very short-term basis. We'll see at the 25.15. Cable's trading at 25.04, and we're 25.11, so really only a difference of 7. We'll take a look at the cable. And talked about this yesterday when I was working on this chart. You can see we're above. This is the most recent low on VWAP, but I haven't. We're going to take a look here. Certainly above single day VWAP. It pushed them a little bit higher. Really, I wouldn't only willing to touch this thing until it got up to 25.30. Then maybe we can go and get a little bit further pause. But we'll see. And there we go. So with that being said, we're going to pull in the news. So risk currencies recover over Navarro after Navarro looks back. China comments. The Australian dollar and other risk-sensitive currencies bounced back from sharp falls on Tuesday after White House trade advisor Peter Navarro said his comments that the trade deal with China was over, were taken out of control. Trump also chimed in, saying the Phase 1 deal struck with China in January was fully intact, quelling market concerns that Washington may be ditching the agreement. The Australian dollar, which had fallen as much as 7/10, turned positive on the day to last stand at 69.22. The market's swings underscore how much the market is worried about possible deteriorations in U.S.-China relations, said Ayako Sera. The world's two largest economies, long marred in acrimony over trade, have clashed recently over the handling of the coronavirus pandemic and Beijing's plans to introduce a new security law in Hong Kong. The wild swings in currencies come as a natural as the market is torn between hopes of economic reopenings in many parts of the world. And we're going to get to those too because, boy, like I said, they were some pretty big swings in currencies. Wow, the Aussie came off and then turned around and came right back. But we'll get to that. From spring, the market has been bolstered by the Federal Reserve's easing and hoping of an economic recovery from the pandemic, but that may have run its course amid rising infections in the U.S. since the middle of the month, said Masashi Hashimoto. We now have to see how much the economy will recover. The longer it takes to recover, job losses will become permanent. That is the problem many countries around the world are facing as the virus continues to spread. The WHO reported a second increase in global novel coronavirus cases on Sunday, with spikes in infection in southern and western U.S. states. And this is the thing, is that we're seeing that here, and for the market to come back as it did on Monday, and I'm talking pre the Asian debacle, for it to come back, and then we closed on the highs. I mean, like I said, I told you when the futures were closing at 4:15 Eastern, we hit 31.14. And I would have thought, okay, when they open up, they'll dip back and they'll have to come back to like 30.95. And instead, they kept adding on the gains, getting up to 31.26. And like I said, when I walked away from the desk, it was at 31. I think it was 31.20. We dipped down to, I think, 17. And then we popped back up to 31.20. And I left the desk for about 20 or 30 minutes, came back, and then that's when we saw that commotion going on. We now have to see how the economy will recover. The longer it takes to recover, job losses will become permanent. In Europe, where reopenings began as early as late April in some countries, business activity surveys due later on Tuesday will closely watch for the clues on the pace of the recovery. Economists expect the year's own positive flash to rise to 42.4. As I said, those numbers have outperformed what the expectations were. One last thing. I was going to cover this. These graphs don't transfer over to that, what was that program I used? Twit, whatever. So I thought I'd just show this. The global dollar crunch appears over as central banks rely less on Fed backstop. Global crunch for the U.S. dollar, that was the hallmark of the early moments of the coronavirus crisis, appears to have passed the latest milestone in a remarkable turnaround in financial conditions engineered by the Federal Reserve and top central banks. Data from the Fed on Tuesday showed its peer banks around the world were tapped for the fewest dollars in nearly 3 months, and it was the main factor driving a surprise reduction in the Fed's $7 trillion balance sheet, the first since February and the largest since the waning days of the financial crisis more than a decade ago. So you can see how this ends up dropping here. The balance of the foreign exchange swaps with other central banks dropped by $92 billion as of Wednesday, $352 billion from $444. Coupled with other indications of cycling demand for the Fed's bevy of emergency liquidity facilities, the reduction in currency swap line usage is, for many analysts, a sign that the global financial markets are returning to a near normal after being upended by the coronavirus. In that period, stocks plunged into bear markets of a record speed. Risk premiums in credit markets mushroomed, and demand for greenbacks overseas well outstripped supply, making the dollar unbearably pricey for the foreign governments and companies of dollar-denominated liabilities. The Fed acted swiftly to try and restore order, along with the facilities, and aimed at U.S. markets, expended currency swaps and agreements for 9 central banks. Given the restored health of the funding markets and the fact that the swap lines will be there, that serving as a backdrop, we expect this handoff from the central bank liquidity to the market to be relatively uneventful, said John Roberts. We expect a more rapid decline over the coming months for the majority of the swaps will roll off. See the dollar crunches over, it's shown here. In addition to the decline in swap lines, several of the Fed's emergency facilities have seen fall in demand for the past several weeks. Outstanding balances and programs suffering credit to primary dealers, commercial paper users. Perhaps the most emblematic of the turn is a plunge in demand for the repurchase agreements, or repos, amounts outstanding in the short-term funding deals between the commercial banks and the Fed at their lowest level since last September. The repo squeeze exploded onto the scene again in March as the state after state issued stay-at-home orders at the massive closures and non-essential businesses in an attempt to control the COVID. On March 18th, the Fed recorded a record repo balance of $4.4 billion. The way in demand has come as markets are more widely gained control and footing of the March's biggest swoon, and stocks have recovered from around 90% of their losses. Dollar funding costs, too, have been largely normalized. So let's move this out of the way. We'll get into the analysis. Bear with me. Okay, let's get into that and bear with me. I was going to see if I could share that story. I do have the ability to share them, but I don't think when it's an interest story like this, I don't know if it. Okay, that's a lot of stuff to have to deal with. Forget it. We go through all that. So let me pull up the. Now, this analysis was pre the hiccup in Asia, although I did the analysis in Asia. But anyway, the euro had a strong close amidst the risk-on move in U.S. equities. Resistance will be 1292 with support at 1220. Well, like I said, we saw this unbelievable turnaround. So obviously, we're going to have to allow for that. Let's take a look at the 2-hour chart. The 30-minute. See right here and here, that'd be 1314. 1314, 1 minute till UK data, so let's go there too. Let's quickly move into that. Bear with me. Okay, flash PMI data is going to come out. There we go. And here's the cable. Let's see what happens here. They're expecting 41 on the flash. 47, so it did better too. And a push up here above 25. We'll take a look also at the guppy. Here's the guppy at 33.94 and starting out at 80.67. And once again, flash came in at 47.6. Wow, that's a surprise too, because there have been concerns about the weakening UK economy. 47 versus 41 in the composite. Manufacturing PMI 50. Wow, above contractionary levels versus 45 expectations. 47 for flash services versus 40. So well done. Oh, let's go on and move back into the euro. So resistance is going to be 13.14. And a pretty good little jump here in the cable. Maybe we'll get a little bit of a pause here. I'll go to that real quick. I think that's important since we just had the news. I'm all over the place, but if you're trading cable, I think it's important. So look at this big jump in here. Look at this. There we go. See here, we did make this jump up in here, but look at this spike here. So we're over here trading around, 350, whatever, across the board, and then we jump up here to, looks like about 1,300 or so. And a quick little pop, you can see here on the 5 minutes. So maybe we'll take a little bit of a pause here. And that did come into a level right here. Look at that, 25.20. Pop right into there on good volume that took out this high. You can see it's starting to pare back just a little bit here. So maybe we'll get a little bit of follow through here on this. Let's go on and go back into the analysis. Oh my goodness. Let's see here. So resistance at 13.14, support. Obviously, we have to adjust to what we've dealt with since Asia. So we're going to go with we'll just go with the 1231 level. 1231. There we go. And let's see. Let's move into the cable. So cable rallied on Monday as dollar weakness was pervasive. Resistance on Tuesday will be 25.48 with support at 24.37. So we'll stick with that, 25.48. And 24.37. Move into the Aussie Dollar. This is quite the turnaround after we took that dip and then we got here and we come right back. So the Aussie posted a strong reversal in closing above the prior 4 days closes. That was here on Monday, of course, and we dipped back and came back strongly in Asia. But the Aussie posted a strong reversal in closing above the prior 4 days closes. Resistance will be 69.45 with support at 68.45. The Kiwi posted a dramatic turnaround closing above the prior 7 days closes. Resistance is going to be 65.27 with support at 64.25. And on to the dollar CAD. It says 10 minutes away from comments, possible comments for Bank of England's Andrew Bailey. So if you're trading cable, just be aware of that. Dollar CAD fell back. We're back towards 35 even, taking out the prior 7 days closes. Support will be 34.63 with resistance at 35.65. So 34.63 for support, 35.65 for resistance. Let's go and move in now to the dollar peso. So the dollar peso retreated on Monday in a slightly less dramatic pullback than other majors. Support will be 22.16 with resistance at 22.85. And you can see the significance of the 22.85. Probably not going to get anywhere near close to that, but that would be the resistance if we saw some type of turnaround. So it doesn't look like we're going to get that at this point. But 22.85, 22.16. And on to the dollar yen. Dollar yen remained in a very tight range on Monday. Resistance will be 736 with support at 641. 641 is quite a bit of a dip down here, but once again, that's where the support's going to come in. And right now we're at 720. Resistance once again coming in at 736. And support remains the same here, 641. Let's go move into the cash dollar index. So the dollar index closed on its lows on Monday in a reversal. Support for Tuesday will be 96.72 with resistance at 97.44. And let's go move into the cross rates. We didn't do this thing. We'll just do it. We do it as we're doing the trade analysis on when we're following it at the time. Unlike the majors, which I do that for the EJs and session. So we did get a pretty good pop back here in the QEN, and I'm going to go with, you could make a case right here, right there, which is actually where the market just barely poked above it. But we'll give it a little bit more, going with a straight up technical level here, which is 69.74. If you're taking it on, that's where the risk would be, but 69.74. And support this low right here, or the open and close, 68.72. Going with the Euro Yen. Well, you can see we had a nice rebound here. Look at this, and resistance is going to be right there at that level, which is 20.95. We actually just exceeded a little bit, but that's going to be resistance 20.95. Support this high right there. You see that? That's going to be support, which is going to be 2021. Moving on to the Euro odd. Man, we are just absolutely stuck in the mud. There's no changes here. None whatsoever. We're just stuck in the mud. So no changes on Euro odd. That's what it's going to take to hit the stops up in here and generate something. So no changes in Euro odd. 62.02 for support. Resistance 64.48. These are where the stops are. And you can see the significance here at 62.02. That's the pink line. Let's go on to Euro Kiwi. Same thing here with Euro Kiwi. No changes. Right here. So no changes here with Euro Kiwi. We are just not moving. Let's go into the Aussie Yen. Should have seen some fireworks on that one. We did go on and come back after this strong close here. Look at that, taking out one, two, almost three. Yeah, that actually took out the three prior days closes. And then we did back, and we came back, and resistance, you can see here, 74.02 is huge. But we'll give it a little bit of room and going with the technical level. Actually, right, just right there at that level, which is going to be 74.47. And support right there. See this close? Actually open, and then this low here, that's going to be support. 73.36. Moving on to the guppy. And you can see here we were just at 34.97. Right now at 33.79, or we were at 33.97. Now we're at 33.79. Resistance is going to be right there. You see this bar here, that low, which is right there. They actually almost got to 34.04. And support is going to be this level, which is below the day's lows, actually. But that'd be support, which would be 32.56. Might even be a little bit too low. See the highs on here. Let's go with that 33.03. 33.03. And finally, we'll wrap it up with sterling odd. Wow, we have gone below this 80.89, which is now going to be resistance. Go here with yesterday's low, 79.95. And that wraps it up for currencies. We'll take a quick look once again at equities. And you can see here we're not even moving. We're just dead in the water. And I think people are just a little bit shell-shocked after, forget just yesterday, but even the day before. The move that we saw, from the, here when we opened down in Asia and this steady climb all the way back with, a little bit of a dip in here. And then we close up in here. We extend it beyond, fall all the way back down here on the Navarro comments that the China deal's over. Come back, okay, and you're thinking, okay, we might dip back, which we did just a little bit, only to see this thing come right back up in here. And we made it up in here to this 31.34 on the 2-hour chart. Now, like I said, you may see a pause there, but we're not seeing anything to suggest some type of reversal. You see, it's not like we're seeing a big spike in volume. We did see when we went from this 31.15 area up to nearly 31.30, but we're not seeing anything dramatic here. So can we pause? Yeah, sure, because like I said, we did reach this 31.34. Probably a little bit of a pause back. Heck, we might even dip as low as to back towards the teens or something, but it's still nothing to suggest here there's some type of reversal. So you just, I think people a little bit just, to a certain extent, shell shocked or feel like they just want to just leave this market alone and see what it wants to go in and do. My thought yesterday when we came back from those depths, and we were here prior to the Navarro comments, I'm thinking this may have to just blow out on the upside. So when we came back, I think we shook some people. I mean, shook some people that definitely were long, but I'm saying shook the confidence of some people. Now we have gone pushed to a technical level, which is this 31.34 on the 2-hour. It's not like as if it's a 5-minute chart, but nonetheless. And so can we take a little bit of a pause? Yeah, but we're not even that much far off. But I think the market may say, you know what? Anyone that's on might say, you know what? I'm just going to take a break here. And so maybe we do go on a dip back, but I think people are just wary of this market now. Hence, my thought to move into, the euro and cable futures, just to go on, and there might be, things happening there when things are a little bit, quieter here, if you want to call it quiet in the spoos, where there's no definitive direction, I think, at this point. Yeah, it's definitive in the sense higher, but do we see anything, do you want to buy it now? It's too late to buy. And are you seeing anything to suggest a pullback? Yeah, pause, but real pullback as far as some kind of a reversal or something. No volume whatsoever since we've been up here to suggest that. So we're just pulling back to a little bit of support here. So nothing that I would want to engage. So what am I supposed to do? Twiddle my thumbs? So like I said, hence taking a look at euro and cable futures. But anyway, that's all that we have. Good luck, and we'll see you in the chat room. Thanks for joining us here on the European Crossover webinar.